Good morning, trading world. Today is March 6, 2024, and this is, excuse me, my pre-market outlook and technical analysis for day trade in the markets. The title of today's outlook is I'm playing Blues Clues, and the first clue is in. So what's the second clue? Let's start by recapping the most important part of yesterday's pre-market session. Yesterday I said, and quote, we need a smaller time frame to give us a clue that this swing low could be different. The first clue that I'm looking for is that we break 51.16 and close below 51.06 on the 2-hour chart time frame this week. That's exactly what we got, and then some. A breakdown and close below 51.06 on the ES. Even though I was leaning another way, thinking or pretty much coming into the opening thinking that we were going to consolidate and bounce. Once we open, the metrics and the market showed me early to change and to leave the short position that I had on in play. Now the next clues to look for is, can we break the previous swing low on the 4-hour at 50.60? Then we should be looking to gather the clues of the next swing highs coming through the time frames. Can the hourly start a new swing up? Can the 2-hour start a swing up? And can this equal to another swing up on the 4-hour? Can the new swing ups equal to breaking the previous swing high on the 4-hour time frame? If we break through the previous swing low on the 4-hour at 50.60, it becomes more probable that we don't make a new swing high on the 4-hour time frame. The biggest thing I am looking for, can the swing ups on the smaller time frames build momentum to carry over to the 4-hour time frame? Now this morning, we see that the smaller time frames has all started upswings. The 30-minute, hour, 2-hour are all in upswings. The 4-hour has not yet lifted out of its downswing. Excuse me. Do we roll over Thursday and Friday to break the previous swing low this week, or go on to create a new swing high on the 4-hour time frame? These are the next clues to be on the lookout for. Two very important reaction areas to look out for today are 51.08 and 51.13. I expect decent rejection off of one of these levels at least once. That brings us to our intraday support and resistance zones. Let me bring those up. All right, here we are back with the intraday zones for the day, and it may be a little confusing on the screens because there are a lot more levels than normal on the screen, but we're in one of those, we're teetering on the brink of breaking back out to the upside or continuing to break down back, or I'm not going to say break down, but break back down into the zone. It may be pushing a little deeper than we just had on yesterday. So let's start On the resistance side of things, our jack resistance was 50.90. Queen resistance is 51.07. And king resistance is 51.17. On the support side, we have our jack support at 50.46, queen support at 50.35, and king support at 50.18. Even though I have this labeled as the support area, part of me believes that it's highly unlikely that we see these levels today. So I'm going to focus on what's above this 50.63, and then this 51.34 and this 51.50 area. As you can see, we've already kind of plastered through the jack and queen, or now at the queen resistance area from the overnight activity. Now, again, I want to focus on some reaction areas. What is building this morning is a possible breakout or breakdown. If we are unable to break through the reaction areas of 51.08 and 51.13, we keep the following resistance zones from overnight. What I have up on the screen, the 50.90 as the jack resistance area, the 51.07 as the queen resistance area, and 51.17 as the king resistance area. However, if we break those reaction areas, we have to make it through a no man's land between 51.17 and 51.51. This is a huge area that will be hard to push through in a day. The more time we spend below 51.34, the more likely it is that we fall back down Thursday and Friday into the no man's land between 50.78 and 50.46. This could turn into an even bigger consolidation bounce for Friday's session. Keep in mind when consolidating that the more time we spend above 50.63 in the lower no man's land, the more likely it is to continue bullish and bounce. And the more time spent below 50.63, the more likely we are to stay bearish and continue to break down. That brings us to the most probable scenarios for today. The first most probable scenario is a bullish biased range day. And when I say a bullish bias range day, it just means that we spend more time excuse me. It's a range day, but we spend more time above, usually above the previous close. So that scenario is probably going to look more like this. We're going to push sideways here coming into the open. I think there's only one thing to look at around 8:15, I believe. Yeah, the ADP employment report at 8:15. So once we get there, that could act as a trigger to push us through these reaction areas at 5108 and 5113. So based on the trigger or not, it's highly likely we could see it could work either way. We could see that ADP report push us back down and we try to build back up through the day, and at some point that 5108 and 5113 come into play and we get decent rejection off of those areas. And then we can consolidate and again try to push back up toward that area. And pretty much chop sideways for a majority of the day. So that's how the first scenario would look, our bullish biased range day. And it doesn't have to be a bullish bias range day. It could turn out to be a bearish bias range day. But we have to let the metrics and the numbers guide us after the open. So that is scenario number one. Now the next scenario could be a rounded reversal day. Rounded reversal day, let's say the ADP report somehow gives us a boom and we break through the reaction areas. So what we would do, we would see that continuation up, and around that lunchtime time frame we would start to level out. And what would happen after lunch is that we get that reversal part, sending us back down. So that's the second most probable scenario, our rounded reversal day type. Now the last scenario is going to be a trend day. It's possible it's possible to get a trend day up, and based on the ADP report, it's also possible to get a trend day down. But right now, based on how things look, I'm looking at a trend day up, even though this is the least likely of the scenarios. But I want to put it up on the board either way, just so that we are prepared. So on the trend day, it's basically we're already starting the day out with a gap up. And the first thing to recognize on a trend day is that gap up, and at the opening we get a push back down or a half-hearted try to close that gap, but it doesn't happen. We find support on or before that previous close, and we get the push up from there all morning. We get a good push up, and then usually about lunchtime we get that lunchtime chop, and then that fake out after lunch, and then we resume the trend from the morning. That's going to be the trend day up. Now again, it's highly likely if we are even thinking about a trend day based on the ADP employment report, the opposite, we would have to get a lot of fall here pre-market, putting us back below that previous close in order for us to think about a trend day down. And it would be the opposite from here. So these are the three scenarios that I want to be prepared for today. As always, your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in the current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.